Hi traders, Luke Suddards here, coming at you from a wet and cold London. This will be the last episode for Technical Tuesdays in September as I go on leave this Friday. And just before I start, we got those really good unemployment numbers out from the UK this morning. And it shows now that the total employment is back to February 2020 levels pre-pandemic. And wages were slightly better than consensus was expecting. That was the big story for today. And later today, we'll get those US inflation numbers, which will weigh potentially on the Fed's and the FOMC's members thinking at their next week's meeting. We're in the blackout period at the moment. We're not hearing anything from them in terms of rhetoric before then. We also got the dots next week. So it'll be a very interesting meeting, to say the least. So let's dive straight into the charts. Just get it on here. Okay. So in terms of the dollar, we saw positioning, saw a very minor pairing of net longs. It was still running around 11 billion net long on last week's data. Inflation data out today. It'll be interesting to see if we get a slight pullback aligning with the Fed's view of transitory inflation. Forecasts are for a minor downgrade on last month's numbers. If we get a punchy surprise, then the dollar could strengthen as a result. And then on Thursday, we get retail sales and jobless claims numbers. So just moving into the charts, let's have a look here at the technicals. So we can see the dollar's been in a bit of a holding pattern between 92.385 and 92.8. It's a tight little range, and it's fluctuating around its 50-day simple moving average and 21-day exponential moving average. I do wonder, is the dollar in a massive range between 93.2 and 89.6 or 89.5, around there? For the bulls, the RSI needs to remain above the 42.93 level, which basically held previous price dips. Just dropped slightly below there. And we want to see price breaking out through there, aligning with price moving higher through that 92.8 resistance level to target that 93.2 overhead range resistance. In terms of levels I'd be monitoring, if price was to break through this tiny mini range support, I'd be looking down to the 92 round number where we saw in early September price hold there. Below there, you've got the 91.5 level, which is where the 200-day simple moving average is. And above, if we were to see a strong inflation number and a hawkish repricing, we could see the dollar charge up to that 93.2 level and even take a shot at the 20th of August high at 93.72. Moving on to the euro. Let me just get this thing out the way. In terms of the fundamentals, what we saw was, the euro saw a nice chunky build in net longs to about $3.9 billion last week due to a sizable decrease in gross shorts. Now, my most likely explanation for this, in my opinion, would be as a result of fears over a hawkish ECB meeting last week, which we didn't really get. We got the tapering, but it was offset with dovish stings in the tail for the hawks. It's a very barren data week for the Eurozone. We've only got a final read on inflation due Friday. Let's crack right into the technicals. So price is sort of, it's given up a lot of its gains from the previous 2 weeks, and we're sort of at this point now where, the euro needs to make its mind up in terms of direction. It's close to the 118 round number. It's right on its 50-day and 50-day SMA and 21-day EMA. The RSI is right on this 52 level, where we see it marked a previous price rally, and it shot up a little bit higher there to about 62, slight overshoot when it rallied back up to 119. In terms of price levels, what I'd be watching for would be the 118.5 and then 119 above there. And if we saw really strong price movement, the 200-day simple moving average at 120 would be a key level. On the downside, we can see there's a bit of support here at about 117.5 as well as 117, the round number. So those would be the areas I'd be watching. I'd be surprised unless we saw a real vol event from the Fed meeting next week or inflation today of it moving outside this 117.5 and 119 bounds. Those would be the sort of price levels that I would think it would fluctuate between in the near term. Going on to the pound, um, in terms of the fundamental stuff, we've got the whole shebang this week in terms of economic data. The employment data out this morning, there were UK job vacancies above 1 million for the first time since records began, which indicates this what we're seeing in the US, a strong mismatch between demand and supply in the labor market. There was solid job creation, 241,000 jobs. It brought total employment to 29.1 million, above its pre-pandemic level. We've got inflation on Wednesday and retail sales on Friday. And it'll be interesting to see if we can get an improvement on last month's weak month-on-month figure for inflation. And, inflation set to accelerate north of 3% as the base effects from last year feed into the data from things such as the Eat Out to Help Out scheme. I think the employment inflation numbers will certainly weigh on and may affect the BOE's thinking before their meeting next week. And in terms of positioning, the pound saw a sizable decline in gross longs, bringing the net position to negative $2.111 billion. This was due to a cut in gross longs, I think maybe over fears of last week on a cabinet reshuffle, which we never actually saw come to fruition. And then looking at the technicals, price has sort of been moving quite nicely up from end of August off these 1.36 lows all the way up now to 1837. It's in this nice little ascending rectangle shape channel, and price is now just above that 1835 resistance level. The 50-day simple moving average is still below the 200-day, which shows that the death cross is still in place, but it's very minor. And if price continues in this path, it could actually go back to a golden cross. The RSI is looking good. It's above the 53.66 resistance level. I want to see it get above 60, though, to really put more tailwinds behind the bullish price action. And for now, yeah, price is being supported nicely. Targets 140, the round number above there, which would go back to where we were in end of July. And if we see the sellers come in, I'd be looking around 138, which is where all the moving averages are stacked roughly, and then below there 136.6. There's a tiny bit of mini support here, 137.5, so you could also look there. Moving on to the Aussie dollar. The Aussie's been quite interesting. It rocketed off this fundamentals, sorry. Let me do that before we get into the technicals. So net short positioning in terms of positioning data is still very chunky for the Aussie dollar. It's at negative 1.6 standard deviations below its 5-year average. It's remarkable that the AUD has remained sort of relatively robust, despite speculative positioning increasing short like this. We saw more states entered lockdown in August, which we forecast may soften labor market data this week, Thursday. And looking at the technicals, prices sort of hovering between this 0.74 resistance and 0.73 round number support. So it'll be interesting to see if those employment figures can maybe catalyze a price move in either direction, whether it be solid or weak. And yeah, the RSI is below the 55 level. It got up to 60 here. 60 seems to be the, if I just move that up, 60 seems to be the level which marks previous price rallies. And it'll be interesting to see if we take another shot at that on a price rally and see if price can get above that 0.75 round number and head towards the 200-day simple moving average. 0.73 is a key line in the sand for the bulls. If that breaks, then we could see price come back down to these 0.71 lows as we saw on the 20th of August. Moving on to the New Zealand dollar, another interesting currency, high beta towards risk sentiment. So, although quarter two GDP data will be stale, which we get out this week, it'll be important that strength would offset weakness caused by the lockdowns in Q3. And we just heard from the Prime Minister Ardern that she's announced that Auckland's lockdown will be extended for a week. A strong quarter two number will help with confidence, and it would also likely affect the thinking of the RBNZ with regards to their rate hikes. So looking at the technicals, we can see prices held up really well. It's hovering and fluctuating around its 200-day simple moving average. The RSI's in the 60 zone, so there's still a bit of room before if price was to rally before it became overbought. Um, and yeah, it's in this range to me. It looks like 0.715 and 0.695. With the midline of that range around 0.705. Above there, if it breaks up above this range resistance, it will target 0.72. And if price was to pull back, we could see it come back down to the 0.705 midline where the 21-day exponential moving averages, as well as zero point 0.7 where the 50-day simple moving averages, and slightly below there we've got that range support at 0.695. Moving to commodity land, gold, the yellow metal, um, you know, on the fundamental side, inflation today, if solid, it could prompt another move higher in the Fed dots next week. And it could see a hawkish repricing, which would mean real yields would move higher, and the dollar would also probably move higher, which is not good for gold. You know, the Fed is giving, however, the Fed is giving primacy to employment figures at the moment, so uh, it may not move the dial that much. We'll have to see how strong or weak the inflation number is, and gold's response in that regard. I did say a bit worried that we could see a triple top playing out here, as that $1,830 resistance seems very strong and gold's really struggling to overcome it. The RSI is back below that 55.60 level, which has marked previous price rallies on those tops there too. It's sort of just in no man's land at the moment, 46, and prices in this very tight range between 1,775 and 1,8. It's got the 50-day simple moving average and 21-day exponential moving average capping upside moves there, and just above there is the 200-day simple moving average. The 50-day simple moving average remains below the 200-day simple moving average, indicating that medium-term trend direction is on the bearish side due to the death cross. In terms of price targets for bullish price action, I'd want to see what price does around here again. It seems like it's very tough resistance at the moment. Above there, 1860 would be the next zone to keep an eye on. Below there, if it breaks through the 1775 support, I'd be looking at 1750 support there. And below there, if we really see a powerful sell-off over the next month or so, 1680 would be the level I'd be keeping an eye on. Lastly, the black liquid oil, it's been quite strong at the moment. And looking at the fundamentals, you know, it's remained firm. And for me, there's been two reasons as to why this is the case. You know, we've heard chatter that the UK could ease travel restrictions, which would potentially provide a boost to jet fuel demand. And supply is still slightly, it's still offline, and it's hurting from that Hurricane Ida in the Gulf of Mexico, and is returning slower than a lot anticipated. So that's helping bullish price action for oil. It broke out of this little triangle pattern I drew here. And it's now sitting on that $74 mark resistance. The RSI's trying to have a little breach through this 58 overhead resistance here. And it's confirming bullish price action. We've got the 21-day exponential moving average trying to cross above the 50-day simple moving average, which would be bullish short-term momentum. In terms of key price levels to watch, you know, you've got $75 resistance, and then above there you've got the 77.82 highs back in early July. If we saw a pullback in price and it headed south, I'd be looking towards that $72 support, as well as $70 on the downside. And if things were to really sell off, you know, we could move back by $68 and towards the 200-day moving average at $66. So yeah, that's the last chart for today. I hope you've enjoyed it, and I look forward to seeing everybody back in early October when I return. Thanks for joining.